Okay, let's bring in Simon Boulton now and get his view in terms of what we're seeing here, because obviously, you know, a fall in unemployment, but what does this mean? I mean, how significant is this number?
There is this, Warren mentioned, and this volatile series is always one to not take with a pinch of salt, but you know, this is an extraordinary result. I think that most economists had it pinned to stay at 6.3. We've dropped to 6.1. The job build in December is an interesting one, with the RBA figures will be interesting. Sorry, the RBA, the Standard of Bureau of Statistics, to be interested to see if they might make a correction next month. But the unemployment rate falling does tie in with an Aequalis survey we did, which is a gradual increase in hiring confidence. And indeed, ANZ's job series has been going up and up.
I might just mention as well, the participation rates actually increased to 64.8% from 64.7%. This is interesting because it's obviously we're quite sensitive to their participation rate. It's actually gone up. So that is quite significant given the fact that you would assume that would mean the unemployment rate would actually go higher.
Yeah, and it's been the other way around in previous months. We've seen the participation rate go the other way, unemployment rate going down. So again, I think we've got to look at a longer-term trend. The first 3 months are definitely going to be significant moves. You know, a month in isolation we always take with a bit of pinch of salt, but it seems to be an ongoing story of good news.
And not only that, that transition into full-time work, 41,600 full-time jobs, a loss of part-time jobs to the tune of 4,100. Again, does that consistent with your surveys as far as just the appetite for perhaps a longer-term job offer being made?
No, I think it does, Carson. You know, that survey that we conducted saw that over 60% of organisations felt they're going to hire more people this year than last year. And you know, the lead indicators here are looking very good. That doesn't reflect in the numbers, you know, for a few months. So if this figure is, you know, falling now, I think with the hiring behaviours that we're seeing, it should at least stabilise or bring it down further.
Let's bring in Michael McCarthy from CMC Markets now into the discussion, because we've seen the Aussie dollar pop. It was above 82 US cents, well, it's pretty much flat on 82 US cents right now. Michael, what do you make of the pop in that and the decline in unemployment?
Well, it makes good sense. We had some very clear leads into this. We saw ANZ job ads jump by 1.8% in December. We've just seen job vacancies for the same month jump by 2.6%. And that was a pretty clear indication that there was some slack being taken up in the market. And I think there's a good lesson in this number for us, whether we're investors, traders or analysts. If we take a mindset into a reading and don't look at the clues leading up to a number or ignore one side of the equation, we're in danger of being caught out. It looks like quite a few analysts have been caught out by these numbers.
Does this kind of, though, go fly in the face of further rate cuts and more importantly the market's view on those rate cuts? When you get a bank like ANZ say as it does today and join Westpac, so two of the big four now calling for cuts, is that a net positive or a net negative for this market?
Well, without in any way impugning the integrity of the analysts, there are peer pressures on analysts, particularly at those larger institutions. And when one of them moves, the others are under pressure to go in the same trend. Now, to be fair to them, the trend in unemployment since the middle of 2012 has been unambiguously up from 5% to that high reading at 6.4. So I can understand why they might have thought that trend was going. But what the RBA has been very clear about is that they're looking for that transition from a mining investment-led economy to a broader economy. And we've already had signs with pickups in retail sales and building approvals that transition is starting to occur. Now, it could still falter, the global economy could still knock us over, but we have had signs that locally that transition has been occurring. And I think that feverish idea that rate cuts were in the pipeline goes directly against what the RBA is telling us. That is that there would have to be a significant change in conditions before they'd move away from their extended period of interest rate stability.
Michael, in terms of, you know, the net employment growth, David Scutt saying, you know, 208,000 jobs of employment growth in 2014, the highest since 2010. Surely this has got to flow through to consumer confidence as well.
I would think so. And with lower petrol prices, we've got a couple of good reasons to expect that we will see a modest opening of purses and wallets around Australia as we move through 2015. That's being reflected in the performance of retail stocks generally over the last week or so.
What about the argument, Simon Boulton, that still seasonality can't be ruled out from all of this? It's still the ABS might not be getting it right, and they could still surprise us in a month or so and say, actually, sorry, we're having to remove a whole lot of our metrics because things are still not looking right.
Yeah, I agree, Carson. These numbers have been, you know, poo-pooed before, but you know, I think they seem to have got the collection methods now, you know, sorted out, so there is a bit more credence put to them. But again, like the chap at CMC was saying, there's, you know, that rising unemployment has been steadying through the last part of last year. Hopefully, we're seeing that plateau. Whether we reach a 6.6%, unsure. But I think think we are plateauing and looking at the unemployment figure, hopefully coming down rather than going up to 6.6% in the next 3 months. I think the next 3 reads will be really, really important. If it starts creeping up to 6.3 again, through 6.4, 6.6 maybe does look likely. My prediction is that this is a peak around the 6.3, 6.4, and we should, over the next few months, see that actually remain steady or start falling.
And how do you read this part rate? Just in terms of the fact that it was above consensus at 60, rather, what was the figure? It was just on 64.8 from 64.7. It is not a huge kind of a step up, but then again, it signals what?
Well, it's showing that more people are coming into the workforce, which can be a signal that there are more jobs in the job market, so people are naturally flowing into those. This part rate as well, we have an ageing population, so there are people leaving the job market, there are people retiring, but we've equally got a growing population. So it's a sort of knife edge. So we've got pressure on the employees coming out of universities and coming into the workforce, but we've also got that exodus of the retiree population. So it's I think the part rate's one that it doesn't move very much, it doesn't move very often, but it is significant just in terms of how the workforce is actually moving one way or the other.
This does seem somewhat in line as well with what we've seen with some of the more recent jobs reads, with the job ads looking better than expected and things like that. I mean, so is the trend looking upwards now, for onwards and upwards?
It's again, I think we've got to look at the long term. Looking at one set of figures in isolation has always caught people out. As long as this trend continues of either stabilising or a declining unemployment rate, I think that's certainly going the way that at Aequalis we're seeing hiring people's behaviour change. Is how we are seeing more opportunities being created, and we are, I think, going to see, certainly from our business, an increase in people getting jobs.
Now, the rise of the multinationals in terms of the weaker dollar, you've made reference to this in some of your findings. Now, is there a level is there an expectation that those multinationals are coming here, or rather that they're looking to this market to cherry pick from? What's the strategy? Are you expecting, in other words, the arrival this year of players that wouldn't have been here, say, in the high 80s, 90s?
No, I think Carson, people are going to stop having their jobs scrutinised for high-cost reasons. We are a high-cost location, and I think people in multinationals have always been under the threat of, you're costing us this, in New York you've cost us that. So I think that pressure comes off. So I think what it means is we're not going to see further job cuts in those multinationals that have always kind of been there as a threat in the background.
All right. We will, because that was all about retention as well, really, that question to say, what's the knife edge story looking like? Is it looking less or more as if people want to make a move offshore, particularly with our static wages? How does that also play out? What is the draw to stay here at the moment?
The sun, the weather, but that only goes so far.
Doesn't help if you're in an office like 9 to 5 and something.
No, it doesn't. And I think, though, that that is a good point, because the unemployment rates in the States and in the UK have been going the other way and coming down rapidly. So the number of job opportunities in London has just been increasing and increasing. Wow. So those people that have or would have made a move to those locations before but haven't been able to, do have that option on the table now.
Okay. Simon, wonderful to talk as always.
Thanks, Carson.
Thank you so much. Simon Boulton from Aequalis.